Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Penguin Solutions, Inc. quarterly report. Penguin Solutions, Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $5 billion. Penguin Solutions, Inc. trades at a higher price-to-earnings ratio of 98 times and a higher price-to-book ratio of 2.91 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. The company maintains a moderate leverage profile, with liabilities making up 62% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. Penguin Solutions, Inc. offers a diverse range of businesses and services that cater to various industries worldwide. The company operates through 3 main segments: advanced computing, integrated memory, and optimized LED. Under the advanced computing segment, Penguin Solutions provides high-performance computing and AI solutions through its brands such as Penguin Solutions, Penguin Computing, Stratus, and Penguin Edge. This includes hardware, software, and services that enable customers to deploy GPUs at scale with its Origin solution. The company also offers continuous availability of critical data and applications in data centers and edge locations under the Stratus brand. In addition to advanced computing solutions, Penguin Solutions provides integrated memory solutions through its Smart Modular Technologies brand. This includes dynamic random access memory, modules, solid-state/flash storage, and other products for various industries such as networking and telecom, data analytics, AI, and ML. The company also offers a range of LED products under the Cree LED brand, including LEDs, packaged LED components, and LED X-lamp and J-series products. Furthermore, Penguin Solutions provides procurement, logistics, inventory management, temporary warehousing, programming, kitting, and packaging supply chain services to its customers. Overall, Penguin Solutions' diverse portfolio of businesses and services enables it to serve a wide range of industries, including OEMs, enterprise, government, and other end customers through direct and third-party channels. Penguin Solutions, Inc.'s stock price has seen an increase of 8.62% in the past year, with a 1-year return of plus 9.68%. Several key news events have contributed to this growth. The company's strong Cone fiscal 2025 earnings report was a significant catalyst for its stock price jump. The report exceeded analyst expectations, with adjusted earnings per share of $0.49 and revenue reaching $341 million, representing a 24.4% year-over-year increase. This positive earnings report boosted investor confidence, causing the stock to surge. In addition to the strong Cone earnings report, analyst upgrades and strong performance in specific segments have also contributed to the company's stock price growth. Loop Capital raised its price target for Penguin Solutions to $35 from $30, maintaining a buy rating on the stock. The integrated memory segment showed particularly strong performance. Penguin Solutions' strategic focus on enterprise AI infrastructure solutions has generated positive market sentiment throughout 2025. The company's product announcements and initiatives, such as expanding its Smart Modular DDR5 SODIMM memory portfolio and releasing ICE Clusterware Management Software 13, have underscored this strategic shift. Strengthening partnerships with key ecosystem players like NVIDIA, AMD, and CDW has also contributed to the company's positive stock performance. These events collectively demonstrate that Penguin Solutions' focus on AI infrastructure solutions and its strong financial performance have driven its stock price growth over the past year. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, increased demand from non-hyperscaler customers for high-performance computing, HPC, and artificial intelligence, AI solutions has been a significant contributor. Additionally, revenue growth from integrated memory business and recognition of $32.2 million in revenue from AI hardware solutions and installation services have also played a crucial role. Furthermore, potential future revenue from ongoing support of SKTS AI data center infrastructure initiatives is expected to contribute to growth. The increase in integrated memory net revenue in 2026 is another positive indicator. On the other hand, decline in advanced computing segment revenue due to the wind down of Penguin Edge business and decrease in optimized LED segment revenue have been major drivers of decline. The loss on impairment of non-marketable equity investment has also had a negative impact on revenue. These factors highlight the importance of understanding the underlying drivers of revenue growth or decline, which can inform strategic decisions and help companies navigate changing market conditions. Net income and profit margins. A year of change, the net income of a company underwent significant changes between 2024 and 2025. While it initially appeared that the net income increased from $5,964,000 in 2024 to $6,055,000 in 2025, a closer look revealed a decrease of $99, 1.7%, compared to the previous year. Furthermore, the net income available to common stockholders decreased by $3,211. The profit margins also experienced fluctuations during this period. The gross profit margin remained unchanged at 28% in 2025, but it had decreased from 28.6% in 2024. On the other hand, the operating profit margin increased from 5.1% in 2024 to 5.7% in 2025. Several factors contributed to these changes. The loss on impairment of non-marketable equity investment negatively impacted net income in 2025. However, the decrease in stock-based compensation expense and improvements in working capital management helped mitigate this effect. Additionally, the company's cost control efforts led to an increase in operating income margin. Nevertheless, the wind down of high-margin Penguin Edge business resulted in a decrease in gross profit margin. The company's financial performance indicates a positive trend in its operating cash flow. According to the extracted summaries, the company has consistently generated positive operating cash flow in both periods, with amounts totaling $31,058 and $13,819. This suggests that the company is able to cover its operational expenses and generate sufficient funds to support its activities. Furthermore, the company's expectation of having sufficient funds to fund operations for at least the next 12 months also supports this positive trend. Additionally, the net cash provided by operating activities was $31,058 in 2025, which further confirms that the company is generating a significant amount of positive operating cash flow. Overall, these indicators suggest that the company is financially stable and able to generate sufficient funds to support its operations. The company's debt level has remained relatively stable over the past few years. The current and long-term debt have shown no significant changes, indicating that the company's financial position is steady. However, a closer look at the total liabilities reveals a slight decrease from $1,008,973 to $993,726. A more notable change can be observed in the interest expenses. Initially, it seemed that there was an increase from $4,396 in 2024 to $47 in 2025. However, upon further examination, it appears that this significant decrease is due to a new credit agreement with different interest rates and margins. This change has resulted in lower interest expenses for the company. The company's performance across various segments and regions has been mixed. On the positive side, integrated memory saw a significant increase of 41.2% in net sales, indicating strong demand for this product line. Additionally, non-hyperscaler customers are expected to drive growth in demand for HPC and AI solutions. However, some areas have underperformed. Advanced computing experienced a decline of 14.6% in net sales, while optimized LED saw an even more substantial drop of 17.7%. These decreases suggest that these product lines may require attention and improvement strategies to regain momentum. Management is optimistic about the company's outlook and strategy. They believe that their domestication and rebranding efforts in the U.S. will yield benefits and drive growth through strategic initiatives. The company also anticipates significant adoption of artificial intelligence, AI, across various industries, including finance, oil and gas, telecommunications, manufacturing, and education. In terms of revenue growth, management expects it to be fueled by acquisitions and expansion into adjacent businesses. However, this growth will come at a cost, as the company continues to incur restructuring charges in future quarters. Furthermore, there is a possibility that the company may seek additional financing through equity or debt, which could potentially dilute existing investors' stakes. Overall, management's strategy focuses on driving growth through strategic initiatives and expansion, while navigating ongoing restructuring efforts and potential financial implications. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has purchased Storm Private Holdings I Limited, which is also known as Stratus Technologies, and Zilia Technologies Industria y Comercio de Componentes Electrónicos Ltda. Additionally, on June 30, 2025, Penguin Solutions Cayman was domesticated to Penguin Solutions Delaware. On the other hand, the company has divested itself of certain businesses. The sale of the Penguin Edge business is one such example. Furthermore, there are plans to sell the remaining 19% interest in Zilia Technologies. These moves indicate that the company is actively managing its portfolio and making strategic decisions to optimize its operations. The company has a history of distributing value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out preferred stock cash dividends over the past 2 years, with records showing payments in 2025 and 2026. Additionally, the issued CPS section highlights the company's commitment to dividend payments. Regarding share buybacks, the company has also been active in repurchasing its own shares. In 2025, it spent $20,193 on share buybacks, while in cone of both 2026 and 2025, it purchased significant numbers of shares for substantial amounts, totaling $15 million and $7.8 million respectively. There are concerns about inventory buildup in the industry. The data suggests that finished goods inventory has significantly increased by 43% from August to November, indicating a potential issue with managing stock levels. This buildup may be linked to the higher sales volumes of flash and DRAM products due to improved market demand and increased supply chain services. Furthermore, the cost of materials and services invoiced also saw an increase of $49,238 in 2025 compared to 2024, which could contribute to inventory buildup if not managed properly. Additionally, there is a concern about constrained memory supply that may affect the ability to meet demand on a timely basis, exacerbating the issue of inventory buildup. The combination of these factors raises concerns about potential supply chain disruptions and the need for companies to reassess their inventory management strategies to avoid further buildup and associated costs. That concludes the financial summary for Penguin Solutions, Inc. Feel free to comment below, and I will be happy to answer them when possible.